Hi everybody and welcome back to another community chat, and I'm joined again by the wonderful Simon Hayes from Eco Accountancy. Good afternoon, young man.
Good afternoon, Roy. Nice to see you.
And you as well. So the reason I reached out to Simon was there's an awful lot of panic around the Renters' Rights Act coming in. Okay, and this is all about the new tax laws. It's all about making tax digital. So the three main things I think landlords are asking me about is what's the rule changes, which kind of doesn't affect you, Simon. I mean, that's my field, I guess. But more importantly, when's the the tax rate going up? And how the hell do we do making tax digital, particularly if we've got sort of, with the greatest respect, well, it's not always elderly people, but we've got clients that just don't do computers, that don't do digital, and can just about send a text message. Talk to me.
Making tax digital. As you say, there's a lot of people that just don't use accountancy software for whatever reason. I'm finding with a lot of my clients, it's the barriers are either the cost or just not understanding it. So I think that's where with making tax digital, and I must say to begin with, for the current tax year, which is 26-27, this only applies if your rental income for the, just trying to get the years right now, for the 24-25 tax year was 50,000 plus.
Okay.
So
is that just rental, or is that also self-employed income included?
Self-employed income. So not together, but separately.
Right.
So if we're just talking about landlords here, so 50,000. So that would, I mean, you can probably guide me on that. That would probably be if you'd have 4 or 5 properties that you're renting out, maybe. So
I mean, 50,000. I mean, to do that, is that income or profit?
That's income, so that's rental income, not profit.
Okay,
rental.
Right.
And that's another misunderstanding. People think it's their profit.
So to be fair, looking at the local market already, you're probably, I mean, it's just over 4,000, well, 4,200 a month nearly.
Yeah.
So to be fair, that's probably only 3 properties.
Right. Okay. So so at the moment, that's who it affects.
Yeah.
From next year, that threshold drops down to 30,000.
Yeah.
And the year after that, 20,000. So once we get onto that third tranche of 20,000, that's going to affect probably most of your landlords.
So if you don't hit that barrier, you can just carry on doing what you're normally doing, do your normal tax return and send it in.
Oh yeah. So
if you're below it.
Yeah, I mean, away from the rental market, I've got a lot of clients that just do what we call side hustles that 5, 6, 10,000 pound a year won't affect them at the moment. There's no plans at the moment, but pleased to say. But so I mean, and that 20,000 threshold, that's like 3 years down the line. So
I mean that's what, near just over £1,600 a month. So again, if you've got one property and it's renting at 1,400-1,500, you've got nothing to worry about. Although you should still do your tax return.
Oh yeah. So,
absolutely.
So this is then moving into making tax digital when you're above these thresholds, which is filing quarterly returns and then a return at the end of the year, final submission.
Right.
So yes, you do need to keep
a lot of work.
You do need to keep records. It doesn't need to be a lot of work. You do need to keep records, and you do need to file those quarterly submissions. You do need bridging software between your records and HMRC to be able to file that. So that's where the market for those softwares is still quite young. There's things like Xero and QuickBooks that are providing software, but I do think, my personal opinion is, once more people get dragged, for want of a better word, into making tax digital, I think that market might mature and there'll be more products out there. Probably at a lower cost as well.
Okay.
I mean, so we're talking about Xero at the moment. It's probably about £16 a month.
It's not a massive expense, and that's tax deductible.
And that's tax deductible.
Absolutely, like that, don't we? Everything, if it's deductible, absolutely, as long as it's legal. So if I've got a client that's got, say, 5 properties and that's generating, say, £70,000 a year, and they haven't got a clue, how can you help them, Simon?
Okay, I mean, firstly, with that level of portfolio and income, this does only apply to those that are renting as a sole trader.
Yeah.
So if they're doing it for a limited company, then it doesn't.
They just do the normal corporation tax
Yeah.
returns as they, yeah.
So yeah, I mean, that's something. So yeah, we can look at that. I can help them with that, guide them through what's required, the processes, and
Brilliant.
do the filings for them, because it's I guess a lot of people sit down sometime in January and get all their figures together.
What, the
And
29th and the 30th? Yeah.
yeah, and
We've
file
been
like
there.
two days before the or on the afternoon of the filing deadline. I guess there's a lot of people do that. You won't be able to do that. You'll need to do quarterly returns, so it does take a lot more organisation. So yeah, they may
Will
be looking at an
HMRC
accountant.
remind people about these dates, or do we know yet?
That's a good question. Well, I don't know, but they probably will do. But that brings me on to if you have an accountant doing it for you, your accountant will be on top of that for you.
Wonder
And
what accountant we can use, eh?
well, I don't know. There's who knows. But yeah, I'd be quite happy to look at that for your clients. And yeah, so you would have so the first quarter would be April, May, June.
Yeah.
So then you have until this, I believe, the 7th of August to file your quarterly return. So that runs in a 3-month cycle like that. So like I say, you've got an accountant who's on the ball, that'll make sure your returns are filed.
Kind of reminds me of a bit like VAT, isn't it? You do your quarter and then you get.
It's very much like VAT.
Yeah, I understand that. Okay, cool. So it's not really anything to really stress about, I guess. It's a change.
It's a change.
And let's be honest, we get used to changes, don't we? We adapt. Being human beings, generally we adapt pretty quickly.
If we want to if we want to put a positive spin on it, it means that you're keeping your records up to date during the year, and there's no panic on the 31st of January trying to get your tax return done. So
yes,
there's a positive spin on it.
That's your favourite time of year, isn't it? Right at the end of January, everyone's going, "Oh, can you quickly do this?" And you're like, "Oh, really?" Yeah, no,
unfortunately, there's no quickly involved in it when you've got to go through figures. So
something a lot of people ask me as well is what can they offset on their, it will be coming soon to many, I would imagine, but on their tax return, be it the quarterly one or just the one yearly, because they've only got one property, whatever. And what can they offset? What are the normal expenses that people can go, right, I can put that against my profit so I don't have to pay tax on it?
Well, as we know, there's the mortgage interest relief that we get, 20% tax credit for that. And then there's
what does that, so for people that don't understand what you're talking about there, I do, but put that in layman's terms for people that maybe have got a couple of properties and it brings them in £2,000 a month and the mortgage is £1,000 a month.
So so it's on the interest of £1,000. So we need to work out what the interest is on the mortgage. And so like you're saying, £1,000. So if we do that over a year, that's 12.
Sorry, I've got that on you, haven't I?
No. That's 20% of that is £200 a month. So that's £2,400 a year. You get a tax credit.
Perfect.
So rather than so they'll calculate your tax and then take that tax credit off.
Gotcha. Understand.
Which is unfortunate then if you're 40% taxpayer, because you still only get the 20% tax credit.
And that's on so that's for the sole traders. Is that the same on limited companies or not?
No, limited company is 19% corporation tax.
Yeah.
On a limited company, you can claim all of the interest as a cost.
Yes, of course you can.
Yeah.
So the 20% tax credit. What else can they offset? I know my costs.
Your costs.
My costs, we charge a fortune.
Insurance costs. No, well, yeah, but like your insurances. I mean, you can correct me here or better explain the insurances that are required.
So like your rent guarantee and legal. Yeah, I think it's something again that keeps coming up in a lot of conversations with people, how they're going to protect themselves with the new rules to evict tenant. And as we said, we had a quick chat beforehand, but I said I can't remember the last time I evicted anybody. I can't actually remember doing it. Generally, the reason for a landlord wanting the property back is non-payment of rent, or they need to generally sell the property. I did say or move back in, but it's generally non-payment of rent and they need to sell the house. They're the two main things which they can still do on a Section 8 going forward. But again, it's like you say, it's that, are they protecting themselves? And joking aside, we mentioned it just now. If you've got a nice big expensive car, you wouldn't drive around with third party insurance. You go fully comp. And it's
Exactly.
like the same with your services, Simon. Yes, it's great. We'll try and do our own tax return and we'll try and use a bit of software. But if you don't know what you're doing, it could cost you more money than what you're going to pay you to do it. And it's the same with us. You know, yes, there is an expense there. Yes, it is tax deductible, so it's not quite as expensive as you think. But it's something I think you need, isn't it? And that's why we need you.
Well, exactly. I mean, you're saying like this, say, an insurance premium is £200 a year. It's tax deductible, so you're saving. If you're 20% taxpayer, that's a 40% saving you on your tax.
Yeah,
Is another way to look at it.
yeah,
Plus the protection that it gives you.
yeah. So end of year tax return. So if they're doing these quarterly returns, is the government, because I don't know this to be fair, is the government going to take at the minute, if you're just sole trader, you pay twice a year on, don't you, kind of half and half type thing. They kind of predict what you're supposed to be paying and then take what's remaining. Am I right? So
Well,
with the
yeah, and
quarterly ones,
I believe it is. It's staying. That is staying as it is. I
fine.
think when making tax digital, I believe when they first mooted the idea all those years ago that it would have been quarterly payments as well.
Right,
But I believe the payment system is now staying the same as it is currently,
right.
which kind of like poses the question: what is making tax digital
What,
all about?
why are we doing it? Yeah.
Yeah, so it's kind of like being made a bit, in my opinion, being made a little bit redundant. But
Yeah, of
yeah,
course.
there we go. But yeah,
Okay, so if somebody wants to reach you, Simon, what's the best way to get hold of you?
um,
Apart from the link on our website, which I will put the link up, but
yeah, I've got a link on my website, which is www.ecoaccountancyservices.co.uk, which has got a link to WhatsApp me.
cool.
Or you can email me at simon@ecoaccountancyservices.co.uk.
Awesome.
That's probably the best ways to get me.
Yeah, brilliant. So I'm hoping just for all the viewers out there that we're going to get Simon in the room. It's going to be looking at June time when we have our next landlord event. Hopefully, he can make it. If you can't, we'll do the next one, whatever. But I think it'd be good for you to come along. People can meet you
No,
face to
great.
face as well. And just basically, of course, it's obviously helping you grow your business, but it's also about helping our clients and make sure that they are 100% compliant and paying the right tax. Absolutely.
Yeah,
So
definitely. Yeah, compliant and there's nothing to panic about.
no, good. That's
Get the right
exactly what
get the
I
right
wanted to
help.
hear.
Get the right help,
Yeah,
and there's nothing to panic about.
fantastic. Simon, you've been an absolute superstar. Thank you so much indeed. I will keep in touch and we'll catch up shortly in regards to the next meeting. And thank you very much indeed for your time.
Thank you, Roy, for your time.